It's Wednesday, August 5th, 2026. You're listening to the DX Today AI Daily Brief. Today, Anthropic signs a $10 billion computing deal with an Nvidia-backed newcomer. The White House finalizes a voluntary testing framework for frontier models. And Nvidia opens up a 34 billion parameter driving model. Let's get into it.
Anthropic has signed a roughly $10 billion six-year contract for AI computing capacity with Volta Infrastructure, a cloud startup backed by Nvidia and valued at about $2.4 billion. The capacity sits in Norway, inside a data center operated by the Bitcoin mining company Bitdeer, and it will run on Nvidia's newest Vera Rubin chips. The arrangement reflects a pattern now common across the industry. Model developers are locking in multi-year compute supply well ahead of demand, and they are increasingly willing to look outside the three large American cloud providers to get it. For Bitdeer, it marks a pivot from mining toward leasing high-density power and cooling to AI tenants.
Now to chip earnings.
AMD reported second quarter results after Tuesday's close, and the data center business more than doubled from a year earlier to $6.7 billion, growth of 107%. The company guided third quarter revenue to roughly $13 billion, plus or minus $300 million. Chief Executive Lisa Su told analysts that an earlier $30 billion estimate for 2027 Instinct Accelerator revenue may prove too low. Even so, the stock fell close to 9% in after-hours trading. Investors have roughly doubled AMD shares this year on the expectation that it becomes the credible alternative to Nvidia, and that expectation has raised the bar for what counts as a strong quarter.
Staying with the earnings picture.
SpaceX delivered its first earnings report since going public, and the reaction was mixed. Revenue rose about 92% from a year earlier to roughly $7.8 billion, up from $4.1 billion. The net loss narrowed to about $541 million, less than half the prior year's shortfall. What unsettled investors was spending. Capital expenditure surged to about $18.4 billion, with close to $15.8 billion earmarked for AI infrastructure. Executives argued the company recovers that outlay within a year. Shares climbed about 9% during the regular session, then gave back ground after hours, as analysts weighed the size of the build-out against the timeline for returns.
Heavy industry feels it too.
Caterpillar posted record second quarter revenue of $20.5 billion, up roughly 24% from a year earlier, with adjusted profit per share of $8.17, a gain of about 73%. The results landed Tuesday and sent the shares sharply higher. Management pointed to broad strength in power generation, a segment that includes the large turbines and backup systems now being ordered in volume to energize data centers. It is a reminder that the AI build-out is not confined to semiconductors and software. Electrical equipment, turbines, transformers, and cooling have become genuine bottlenecks, and the industrial suppliers who make them are recording some of the clearest revenue from the trend.
To Washington now.
The White House met Tuesday with Anthropic, Google, Meta, and OpenAI to review a completed voluntary federal framework for testing advanced AI models. The framework traces to an executive order signed on June 2nd, which asks developers to give federal agencies up to 30 days of access to covered frontier models before those models reach outside partners. Participation is voluntary rather than mandated. The administration has declined to publish the evaluation framework itself and has not explained why. That decision drew criticism, coming after publicized security incidents involving systems from more than one leading laboratory. It is the clearest signal yet of how Washington intends to supervise frontier development without new legislation.
A significant model release.
Nvidia has released Alpamayo 2 Super, an open 34 billion parameter vision language action model built for robotaxis and autonomous driving. It pairs a 32 billion parameter reasoning backbone drawn from the company's Cosmos family with a smaller diffusion-based action module of about 2.3 billion parameters, handling perception, reasoning, and vehicle control in a single system. Nvidia published the weights under its OpenMDW 1.1 license, which permits commercial use, fine-tuning, and redistribution with the accompanying source code under Apache 2.0. The model also emits reasoning traces so developers can tie what the system observed to the maneuver it chose. That auditability matters for safety validation work.
Infrastructure in a shipping container.
Runware unveiled what it calls the Sonic Inference Pod, a modular data center packed into a standard 20-foot shipping container. Each pod holds up to 1,200 GPUs and draws roughly 1 megawatt, and the company says it can be sited close to cheap power rather than waiting years for conventional capacity. The launch marks a shift in the company's model. Runware had largely resold cloud capacity from others. Owning the hardware changes its cost structure, and it argues lets it price inference well below the established providers. Containerized compute is not a new idea, but the economics look different when inference demand is growing faster than utilities can connect new load to the grid.
Now to deal-making.
Bending Spoons has agreed to acquire Airtable in an all-cash transaction, valuing the American software company at about $1.3 billion on an enterprise basis. It is the Italian firm's first acquisition since its NASDAQ debut on July 1st, and it follows a well-established playbook. Bending Spoons buys mature software businesses with large installed bases, cuts costs aggressively, and raises prices. Airtable, a collaborative database platform once valued at $11 billion in the private market, has spent the past 2 years repositioning around AI agents. The deal is a blunt marker of how far valuations for that generation of work management software have moved.
A prediction market raises.
Polymarket is seeking new capital at a valuation above $20 billion, according to reporting from Bloomberg, confirmed by several outlets. The prediction market platform is said to be in early talks to raise roughly $1 billion, and the target sits well above the level it commanded in a round closed earlier this year, with participation from the hedge fund D.E. Shaw. Prediction markets have drawn intense investor interest as they move from the regulatory margins toward mainstream financial infrastructure, and as their pricing data becomes a feed for AI forecasting systems. Competition in the category has sharpened considerably, which helps explain both the pace and the size of the raise.
Funding news continues.
HappyRobot has raised $150 million in a Series C round at a post-money valuation of $1.2 billion. The company builds AI agents that handle the phone calls, emails, and document work that move freight, and it has found early traction in logistics, an industry still running on brokers and manual coordination. The round is a useful data point on where agent deployments are actually generating revenue. Rather than general-purpose assistance, the businesses attracting this scale of capital tend to target one workflow, in one industry, where the labor cost is measurable and the error tolerance is understood. Its founders say the company is still early in that market.
Security spending follows the agents.
Obsidian Security has closed an $85 million Series D at a post-money valuation of $1.1 billion. The company secures software as a service applications, and Chief Executive Hassan Imam says the pressing problem now is autonomous AI agents reaching into cloud applications with standing credentials and very little oversight. Every agent an enterprise deploys becomes another identity with permissions, and most organizations cannot say precisely what those identities are touching. That gap has opened a distinct category of security spending. It is worth noting how quickly this has happened. Agent governance barely registered as a budget line 18 months ago, and it is now funding unicorns.
And finally, workforce news.
Nutanix told regulators it will cut about 5% of its global workforce, with the restructuring substantially complete by the end of October. The cloud software company expects charges of up to $43 million and framed the move as reallocating resources toward AI, modern applications, and infrastructure. Nutanix has continued to post revenue growth, which makes this less a story of distress than of deliberate reshaping. That pattern has repeated across enterprise software all year. Companies reduce headcount in established product lines while hiring against AI roadmaps, and the net figure disguises how much churn sits underneath it.
That's your briefing for Wednesday, August 5th, 2026. For DX Today, stay curious.